So I welcome all our honorable viewers on behalf of the Institute of Chartered Accountants of India and on behalf of the Research Committee. I am CA Anuj Goyal, Central Council member of the Institute of Chartered Accountants of India and the chairman of the Research Committee of the Institute of Chartered Accountants of India. We are having our very prominent resource person, CA Dr. Arun Sundaramji and CA Charles Rajeev. I, on behalf of ICAI Research Committee, as well as very prominent Kishangarh branch, welcome our honorable resource persons, our honorable guest speakers. So very big round of applause for both of them. And of course, I welcome our honorable chairman, very prominent chairman, CA Saket Kalani sir, our honorable chairman of Kishangarh branch of the Institute of Chartered Accountants of India. So very big round of applause to CA Saket Kalani ji. And we are having the presence of Ankit Somani ji, past chairman Kishangarh branch, and our honorable secretary of Kishangarh branch, CA Mohit Jain ji. So I welcome all of you. We are having Dr. Amit Agrawal ji, our honorable secretary of the research committee, as well as secretary of the committee on capital markets and investors protection, and CA Amit Agrawal ji from the research committee of ICAI. We are having more than 2,000 participants from each and every part of the world. So I welcome all our honorable participants from each and every part of the world. I once again welcome CA Saket Kalani sir, our honorable chairman of Kishangarh branch. Over to Dr. Amit Agrawal ji, our honorable secretary of the committee, for further proceedings. See, Dr. Amit Agrawal ji.
Thank you, Chairman sir, for starting the very important VCM on research on imperatives of fintech ecosystem. We have a very learned speaker, CA Dr. Arun and CA Charles Rajeev with us, who will be deliberating on this very important topic, research on imperatives of fintech ecosystem. We welcome the viewers of today's VCM, and this VCM is being hosted by a very prominent branch, Kishangarh branch of CRC of ICAI, the well-known branch for marble industry. I think the producer of marble, I think the supplier of marble in across the globe. I think the finest marble industries are there. We have our worthy chairman, C. Anuj Goyal ji, with us, the chairman of Committee for Capital Market and Investors Production. We have hosting branch chairman Saket ji, Ajay, and we have vice chairman Ajay Jain ji. We have treasurer and past chairman Abhishek ji. We have Ankit Somani ji, past chairman. We have learned speaker CA Dr. Arun ji and CA Charles Rajeev. We have Mohit Kumar Jain ji, secretary and Sikasa chairman of Kishangarh branch of CRC of ICAI. I think this galaxy of panelists and the learned speaker would be enlighten us on this very important topic, fintech. I think the technology and finance both come together can bring a change in the society. And today, I think my kudos to my chairman who has chosen this very important topic, the very dynamic chairman. So not taking much time, I would request for welcome address CA Saket Kalani ji, chairman Kishangarh branch of CRC of ICAI. Over to Saket sir.
Thank you. Dear CA Saket Kalani, Kishangarh branch chairman, welcomes you all for this VCM organized by Research Committee and hosted by Kishangarh branch of CIRC of ICAI. We welcome to our Central Council member C. Anuj Goyal sir, or chairman are also research and committee, and vice chairman C. Pramod Kumar ji Bhoop sir of this committee, and our speaker C. Arun ji sir and C. Charles Rajeev sir, and also welcome for all participants. Over to sir. Thank you.
Thank you, Saket sir. Now I request CA Ajay Jain ji, Vice Chairman Kishangarh branch of CRC of ICAI, to kindly introduce our learned speaker, CA Dr. Arun ji.
So I will take the privilege to welcome Dr. Arun Sundaramji. Mohit ji, you will like to welcome, introduce? You are having the profile
yes,
of...
sir.
Yeah.
It will be,
So
it will be my pleasure, sir, to introduce and welcome sir and all of you. The Kishangarh branch is very, very privileged to have this galaxy of panel to this branch, and we are very obliged to Anuj sir and Amit sir. You are so kind to us to allow us to host this program. Without taking much time, I just want to introduce the star of today's session, speaker of today's event, CA Dr. Arun Sundaramji. Sir has completed his FCA, ACS, PhD and completed his CA in 1987. The time we had not taken our birth even though. And secured his PhD in Information Quality Strategy from BITS Pilani 2013. Arun sir has established as a leader in information technology industry with over 23 years of specification and data analysis. Arun sir has actively associated with academics, serving IIM Trichy as guest faculty and teaching business insight from big data. Arun sir also serves affiliated graduated faculty of university at Little Rock, USA. Arun sir is the board of studies members in Pondicherry University. We are very, very obliged to have sir at this platform. We are welcoming you to the Marble Mandi, the Marble Kishangarh, city of Marble Kishangarh. Over to you, sir. Thank you a lot.
Thank you, sir. Now I request to introduce CA D. Charles, sir.
Sir, maybe Ankit Somaniji's audio is not connected. So
I will take the opportunity to welcome CAD Charles Rajeev. Charles has over 25 years of broad experience in banking and digital technology, performed varied roles in implementing strategic business solutions, including large core banking and digital product and pricing transformation across the globe. He is a fellow member of ICAI, a certified business analyst professional, CBAP, an advanced certification offered by the International Institute of Business Analysis, IIBA. He is also a core working group member of BIAN, Banking Industry Architecture Network. He was also the founder of a neo bank, which is operating in India as well as in United Arab Emirates. He is currently driving growth as part of SaaS customer success, shaping up value propositions for product and pricing transformation for banks across the globe. With these words, I welcome our honorable resource person, CAD Charles Rajeev. Very, very big round of applause, friends.
Thank you, Chairman, sir, for a nice introduction of our worthy speaker, Charles Ji. And since Ankit Ji is, I couldn't find him on the screen, so I take this privilege to introduce my own chairman, C. Anuj Goyal Ji. Although the viewers are not, I don't think any one of the viewers is not knowing to Anuj Ji, because he is the 5th term council member in the council of ICAI. He has served 15 years. And prior to that, he was the chairman of regional council of the Institute of Chartered Accountants of India. And then before that, he served in the branch. So he belongs to the very, he started his career in early age at the age of 22 years when he was the member of all the 3 institutes. At the same time, he was the executive member of all the 3 institutes. I think this is a new introduction I'm sharing with you people. Because friends, let me share with you that he's a scholarly guy. He qualified his chartered accountancy, company secretary, and cost and works accountancy in the age of 22 years. At the same time, he decided to serve the profession at 3 institutes. So at Ghaziabad branch of ICAI, he was the managing committee member and office bearers. He served there 6 years. At the same time, he was the chairman of Institute of Company Secretaries. He was the chairman of Institute of Cost and Works Accountant as well. Then he moved, after serving 6 years in the branch, he moved to regional council. And then he served the regional council as the chairman. He was the youngest chairman in the Central India Regional Council. which comprise 7 states. Then he moved to Central Council of the Institute of Chartered Accountants of India. So he's a DSA, DRM, MCOM, LLB, and many more qualifications in his credit. So he's the chairman of Research Committee, one of the oldest technical committee of the Institute of Chartered Accountants of India, and he's the chairman of Committee for Capital Market and Investor Instruction. He's the vice chairman of a Committee for Corporate Governance and Corporate Laws. He's a member of many committees. I think during his 15 years in the Council of ICAI, he has served almost each and every department of the institute. So with his vast experience in the council, I think this is the beauty that we have him as a chairman in the this very, very important oldest technical committee. Under his able guidance, last year we were the pioneer in the field of research. We have constituted one international research award in the history of accounting history. Globally, this was the first award, and I'm proud to share with you this year also we have successfully completed this second international research award. Our ceremony is far away. It will take some time, but we have completed the jury meeting and we have decided the awardees. So this is the progressive leadership of C. Anuj Goyalji, and many more initiative has been taken by Anujji. So I will not take much time. It would not be justified if I am speaking and chairman is there. So let chairman speak, let him interact to members. And I would request my worthy chairman, C. Anuj Goyalji, to offer his words of wisdom for opening remarks, sharing the initiative of the Research Committee and Capital Committee to the members, as well as pave the path for deliberation. Because if there should be some ice-breaking section, there should be some keynote address by a learned person. When there are two senior professional colleagues are there, who will be deliberating on a very, very important topic. There is a need of art, there is a need of moment that a person should be there who understand the subject, who understand the expectations of the members from this deliberation. So it would be good because ours is limited to within 2 hours, 2 speakers, very, very important topic. So it is the right opportunity when chairman speak and he sketch the outer boundary, what is to be discussed, where and what is the expectation of the members from the speakers. So with these words, I would request my chairman, C. Anuj Goyalji, for his opening remarks.
Thank you, Dr. Amit Kumar Agarwalji, our young and dynamic secretary of this very, very important research committee of the Institute of Chartered Accountants of India. I welcome on behalf of the Institute of Chartered Accountants of India, on behalf of the Research Committee of ICAI, and on behalf of very, very prominent branch of the Central Region from the state of Rajasthan, Kishangarh, our honorable guest speakers, CA Dr. Arun Sundaramji and CAD Charles Rajeev. And I am quite confident that and of course, we are having very, very prominent leaders of the profession from Central Region, from very, very important and prominent branch of the Central Region. The chairman, CA Saket Kalaniji, my brother, and of course, Mohit Jainji, our secretary and Sikasa chairman of Kishangarh branch. And we are having the presence of CA Ankit Somaniji, past chairman, Kishangarh branch, and we are having more than 2,000 chartered accountants from each and every part of the country, rather outside country. So I welcome all of you on this very, very important VCM on the research on imperatives of Fintech ecosystems, organized by the Research Committee of the Institute of Chartered Accountants of India. So friends, I'm quite confident that all of you are safe and sound at your respective place. At the outset, I would like to extend my warm greetings to each and every member who are present among us for today's VCM on one of the very, very important area of the research considering the current ecosystem of technological advancements in financial sector, that is research on imperatives of fintech ecosystems. And I'm quite confident that all of us will be richer in knowledge after hearing the deliberation by two learned speakers, Arun sir and Charles Raj sir. Friends, ICAI, during its journey of 72 long years, has achieved a remarkable height, has strongly come out as a partner in nation building, and now stands tall behind the strong global standing of Indian economy, along with contributing immensely in the area of research. Research committee of ICAI is one of the oldest technical committee. उसको भी देख लेंगे.
Sir, you are on mute, sir.
Research committee, friends, research committee is one of the oldest technical committee of the Institute of Chartered Accountants of India. Was set up way back in 1955 with a view to undertake research activities to improve the quality of services rendered by the profession, being a knowledge-driven profession. Charles sir, I am of the view, Saket Kalani ji, that as far as the Institute of Chartered Accountants of India is concerned, as we are producing the best accounting professionals across the globe, the research is supposed to be the backbone of any organization, particularly the educational institutions, and more particularly for the statutory body like the Institute of Chartered Accountants of India. So we are trying our level best that how we can put our 100% as far as the research activities of the Institute of Chartered Accountants of India are concerned. Friends, I truly believe that research is the bedrock of innovation, and innovation that engenders growth, which recognize the power of research in accounting and other affiliated areas for societal development. Friends, as rightly remarked by one of the philosophers, knowledge has a beginning but no end. Marching towards the similar thought, Research Committee is in a strong mission to conduct regular professional courses, workshops, training programs, and virtual CPE programs with an aim and vision to continuously update and upgrade the professional competency of members at large by sharing practical professional knowledge in the area of research and related domains. Now, before going into the essence of today's session, I would like to share some of the initiatives of the Research Committee, which may be quite significant for the members at large. One initiative which we have taken last year, fortunately I was the chairman of the Research Committee last year also, we introduced ICAI Doctoral Scholarship Scheme. And Saket ji, Mohit Jain ji, this ICAI Doctoral Scholarship Scheme is open for all the members of ICAI who are pursuing PhD and are not more than 40 years of age. And I'm quite confident that the young researchers, young chartered accountants will certainly go for the ICAI Doctoral Scholarship Scheme. And the scheme aims to provide scholarship to the eligible candidates having outstanding academic record in 10th and 12th standard and an inclination and commitment to undertake research in the areas such as auditing, taxation, commerce, management, and accounting. The scholarship of rupees 50,000 per month for 3 years will be given to 5 scholars, and the last date for submission of the application is 31st August 2021. So I will request all our honorable viewers to be the part of this initiative of ICAI Research Committee, and the young researchers who want to go for PhD on full-time basis can very well come forward and be the part of our this initiative of ICAI Doctoral Scholarship Scheme. Then ICAI Research Project Scheme. Friends, for the first time in the history of the Institute, last year, we initiated ICAI Research Project Scheme. This is a very, very ambitious initiative of the Institute of Chartered Accountants of India, of the Research Committee. And the members who are having the exposure experience of more than 10 years, either in practice or in employment, are eligible to be the part of that ICAI Research Project Scheme. And a maximum amount of rupees 10 lakhs will be reimbursed to the
Excuse me, sir. Anuj sir is joining from different device. I think there is some technical issue.
So, friends. Yeah, some problem was there. Sorry for that. So we are trying our level best to see that how we can really do something very, very concrete for the cause of the profession, for the cause of the members, for the cause of the students. We already have initiated this ICAI research project scheme. Last year, 7 research projects were approved, and all the 7 research projects were very, very good for the profession, were very, very good for the nation, and were completed within the given time frame of 6 months. And we have handed over their findings to the various government departments, central governments, state governments. So we are trying our level best to see that how we can really prove ourselves as a true partner in nation building, as rightly remarked by APJ Abul Kalam, our ex-president of the country, that chartered accountants are partner in nation building. And in addition to that, friends, we have initiated one of the very, very prominent ICAI International Research Award. For the first time in the history of accounting profession, last year, ICAI introduced International Research Awards. Awards could be considered as the world's largest cross-border competition, with an objective to encourage and provide recognition to research scholars across the globe and their contribution in fostering research studies, leading to innovation and value creation. The scope of the awards would be to identify the topics of international and societal importance, encompassing areas of accounting, auditing, economics, finance, and taxation. In spite of having such a short time frame for application, we have received an overwhelming response of around 138 nominations this year also. And we believe that this initiative will be high-flying and contribute immensely to the research domain. Yesterday, we have successfully completed jury meet for the award also. So I welcome CA Rajeev Ahujaji, our very, very prominent chartered accountant, and is contributing like anything for the cause of the profession. He is chartered accountant turned advocate, and he's having an expertise in direct taxation. So I am really very happy that he is amongst all of us. And friends, our volunteers like Rajeev Ahujaji, I think with the help of them, we are getting the best of the contribution to see that how we can serve to the members, and we'll try to see that how our chartered accountants, who are the best accounting professional across the globe, can further sharpen their skills with the support of the resource persons like Charles sir, the resource persons like Rajeev Ahujaji. So I welcome CA Rajeev Ahujaji, chartered accountant turned advocate, and a very, very prominent resource person, is contributing like anything for the cause of the profession. So welcome Rajeev ji. I was just discussing, friends, that at research committee, we are trying our level best to see that how we can really do something very, very concrete for the cause of the profession. That this ICAI International Research Award, this year, we are having this ICAI International Research Award. The jury meet has already been taken place. The IFAC president of International Federation of Accountants, was the chairman of the jury. And similarly, last year also, the IFAC president was one of the member, and immediate past president of International Federation of Accountants was one of the was the chairman of the jury of the ICAI International Research Awards. That shows how important this ICAI International Research Award initiative of the Institute of Chartered Accountants of India of the Research Committee is. So then ICAI Awards for Excellence in Financial Reporting. So, sir, we are trying our level best to see that how we can recognize the best of the financial statements, best of the financial reporting, and the research committee since 1958 to promote high quality financial reporting through the annual awards competition, ICAI Awards for Excellence in Financial Reporting, wherein the entities are being recognized for following sound financial practices amongst their peers. And friends, you will be happy to note that this year we had also conducted training program for our technical reviewers to enhance the quality of review to be done. The awards are open for the corporates to submit their annual reports in order to recognize and encourage excellence in preparation and presentation of financial information. Last year, we have received the highest number of entries for the awards in the last 7 years. This year, categories of awards have been revised. A new category of municipal body has been incorporated. So I will request all of you that how we can get the maximum number of entries. We are having a target this year that in the last more than 70 years, highest number of entries we will be having this time in spite of Corona pandemic. Friends, the buzz around the word fintech has gained enormous attention of traditional financial institutions, startups, venture capitalists, and regulators in the recent times. Fintech, the word is a combination of financial technology. It is a new technology that seeks to improve and automate the delivery and use of financial services. At its core, fintech is utilized to help companies, business owners, and consumers better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computers and smartphones. Now, with the growing presence of fintech, the financial services industry is undergoing a paradigm shift. Emerging technologies like artificial intelligence, AI, machine learning, the Internet of Things, IoT, and blockchain, combined with ever-changing customer expectations and preferences, are redefining how financial institutions deliver services. Banks, insurers, and asset management companies are also undertaking major transformation efforts, transitioning from complex legacy technology environments to more agile operations and creating more efficient compliance processes that fully satisfy evolving global and jurisdictional regulations. Experts have started considering fintechs as a major part of the digital future. Further, the swift evolution of fintech has forced traditional financial institutions, banks, insurers, and asset management companies to face a new reality. Products, services, and business models that have worked for decades are no longer an option in the digital world. To thrive, organizations recognize that they need to reinvent what they do and how they do it. This situation calls for need of research in the area of imperatives of fintech and how the ecosystem created surrounding it can revolutionize the nature of rendering financial services in future. Therefore, through today's VCM, our focus will be placed on exploring the areas pertaining to research on imperatives of fintech ecosystems. So with this, I will not be taking your further time as we are very, very eager to hear our honorable resource persons, our honorable guest speaker, the brand ambassador of the Institute of Chartered Accountants of India, the brand ambassador of the Chartered Accountants in this particular field, Charles Raj sir and Arun Sundaramji sir. And I welcome our honorable guest of honor, CA turned advocate, Rajiv Ahujaji. And I am really grateful to our honorable chairman of very, very prominent Kishangarh branch, my brother, CA Saket Kalani ji. Under his able leadership, we are really doing wonders for the cause of the profession, and CA Mohit Jain ji, our Honorable Secretary and SICASA Chairman. And I am quite confident that after the deliberation of our both the speakers, we will be certainly richer in the knowledge. So I will not be taking your further time. I once again welcome all our honorable viewers. I think more than 3,000 chartered accountants are live with us. So I once again welcome our honorable members from each and every part of the country, rather outside country also. So now, without taking your further time, may I request our honorable guest speaker, CA Dr. Arun Sundaramji, sir, for his deliberation, for his words of wisdom. May I request all of you to put your hands together in welcoming our honorable guest speaker, CA Dr. Arun Sundaramji, sir. Very, very big round of applause. Over to Dr. Arun Sundaramji, sir.
Thank you, sir. Thank you so much for the very wonderful remarks, opening remarks. Thanks to the organizing committee, the research committee of the ICAI, for giving both myself and Charles this opportunity to join the learned members. 3,000 plus, that's really amazing number. And also thanks to the Kishangarh branch, CA Mohit ji, CA Ankit ji, for the wonderful and warm reception that you're having with us. Of course, it's a remote one, but we really feel that we are surrounded with the marbles, the way Mohit ji has really explained and explained about the Kishangarh. So I wish we were in person and doing this, but yes, this is really the call of the hour. Let me try and bring up a quick presentation and share the screen. I hope the presentation is visible.
Yes, sir. Just full screen, sir. Just full screen.
Yes, sir. Okay. So first of all, again, our salutations to the CA Institute's logo, emblem, and the motto. With that humble salute, we'll start this session. Really wanted to have this PowerPoint presentation on to share some of our thoughts and experiences. On a lighter note, typically, people say that we use PowerPoints only when there is either no power or points in our presentations. So hopefully we don't land up that way, and then we hope to share some good powerful points through the day. So they're just taking a quick peek into the research into this information technology based fintech topic. If you all recollect, this is kind of a series that we have been trying to do. Last June, 18th of June, we had the first session on the research touching on information technology, AITF as we call, and I just wanted to draw some key learnings or key topics from there, because that will be a continuity in the flow of today's deliberations as well. Of course, again, we had multiple key principles discussed there. The first one being, how the roles, different roles come together: technology roles, semi-technical roles, or quasi-technical roles, domain specialists, data specialists, etc., and management specialists all come together to deliver a information technology solution. So that is the first thing that I wanted to recall. And then the second thing is this research framework how do we evolve a multidisciplinary framework for research around focusing on a particular industry or domain, and then developing solutions around that using the modern technologies. And of course, how do we connect back the key research topics or the questions or the hypothesis, which is purely a blend of domain and technology. So that was the framework that we discussed. And the third one is, of course, how easier is the information technology research itself it is becoming, right? Be it the access to software, the storage or compute or data, and then finally the idea being the key or crux thing, right? So in fact, I understand that it's been about 1 month and 4 or 5 days since we had this session, but everything around this has become even much more cheaper. There are few thousands of data sets that were added in public domain, for example, and all the computing infrastructure, etc., has also become much more powerful than what it was in the last 1 month. So that is the speed at which the technology advancements are happening. And we also talked about the interdisciplinary research, which is what we will continue to be the key topic today. And we also touched upon a couple of examples of how this framework and the interdisciplinary research comes into play using a couple of industry examples. Today, CSR Charles sir will really take us through some of the case studies based on his vast banking experience on the same lines. And finally, we also saw some research topics, which we will again cover here as well. So coming back to fintech as an industry and or as an ecosystem, again, Charles will help us whether it is fin or tech or where is the ratio. To layman, it can be it's a 7-letter word. So is it a 3:4 ratio distribution in terms of skills and content? All those aspects Charles will clarify. But largely, in the fintech comprises 3 broad areas in my view, which is all the functions that has already started be merged into this fintech, starting with deposits, loans or credits or fundraising, all the traditional banking functions, so to say. And then secondly, the traditional the functions translating into the services, be it authentication services or identity services, transfer of money, storage of money, lending of money, exchange of money. All this we see in the right box are about services around money. In fact, this is very relevant today because I am sure we have seen, all of you have seen in today's news as well. The Reserve Bank of India is looking at how do we launch or how do we adopt a digital currency framework in the country. It is the thoughts are still evolving, but I'm sure the research inputs from this ICAI and the research committee will be a great wealth of information, input, and advice to the Reserve Bank in evolving such a strategy. And on the bottom side, we see is using these functions and services, what are the ancillary services around compliance, clearance and settlement, securities, etc., which are more of a back office nature, are also taken care. So let me pass here, Charles. Does it give a kind of a broad brush, or how do you intend to cover this as you go subsequently, Charles?
Absolutely, Mr. Arun. So, hi everyone. So when we look at these spaces that are here, traditionally over the last 50, 60 years, these spaces were dominated by very large monolithic organizations who have huge capital, which was seen as an barrier of entry for other new entrants to come into these industries. One of the things that fintech has done is to remove the entry for barrier for having the requirement for a very large capital base. With a very agile software development that focuses on the particular problem that you want to solve, you can get in and disrupt any of these spaces, which is what we want to explore. And for that, research is key. To get the right research focused on the right imperatives is key to find that niche and then to build a technology for that niche and then to scale it up. So which is what we want to give as a foretaste before we start to dwell deep into some of the aspects of it.
Okay, thank you. Thanks, Charles. So moving on, again, this is how a fintech sits at the center of all the technologies. Again, our honorable chairman, C. Anuji, kind of touched on the technologies around this landscape. The key is based on the problem that we want to solve, a micro level problem that we want to solve, these respective technologies or combination of them come into play. It could be, for example, AO along with IoT, or it could be AO plus blockchain or IoT, or using all of these technologies. The choice is purely driven by the nature of the problem and the type of solution that is coming out of the research. And that is why basic understanding and awareness of these technologies that come into play are extremely important as well. And on the right side, what we see is with these technologies, and as Charles just mentioned, breaking the barriers, and how with the choice of technology and solutioning using technology, a creative destruction can happen. That a solution that kind of destructs the age-old way of doing business and creates a new way of working with the clients, with the banks, with the institutions, etc. So that's the innovative disruption part of it. And of course, it's achieved through digitalization and reducing the role and extent of dependence on middlemen, etc. Right, and this is what is really the birth of a neobank. And again, we have Charles, who has extensive experience, including founding and heading a neobank. So we will hear more as we go forward. So much so that really the boundary between visit a finance company or a financial services company or a technology company is getting blurred as far as this ecosystem is concerned. With that, Charles, again, please take stage and walk us through your wisdom, words of wisdom.
Thank you, Arun, sir. One of the key aspects that you will see in this space is, a couple of slides ago, we saw all the various spaces: insurance, finance, lending, and so on. So here we find a small gist of all the upcoming fintechs which are ruling this space, which are starting to make a dent in terms of how they acquire customers, how they serve them, and how fast they grow. And these could broadly be divided into a B2B model versus a B2C model. As we all know, all the fintechs aim to solve a long-standing industry problem using technology, making it faster, simpler, cheaper, and better. However, some fintechs will choose to give their services to the incumbents, what we call as. Who are the incumbents? They are the large banks, the financial institutions, insurance companies, capital market firms that today are ruling the roost. So some of them provide their services to these industry-based customers and earn a software revenue, which is a major revenue model. That is B2B. Some of them directly go to the customer and start being a competition, whereby they start a new customer acquisition model. The customer pays them directly, and they're a direct threat to the existing incumbents in that industry. We find fintechs in both these shades coming up. And the key is the research imperatives that you will have to do for a B2B is slightly different from what needs to be done for B2C. In B2C, you directly address the customer's problem, whereas in B2B, you address the end customer problem in an indirect way by solving something better for the institution at large. To give you a small example, pricing and billing for banks, right? So the bank has various types of charges which are levied on customers: minimum balance fee, ATM withdrawal fee, payment fee, card fees, check issuance fees, so many fees. If you want the ability to customize all these fees in a more rapid way, you can develop a charge engine. Some companies have done that. And it could be hosted on the cloud, and then it can extract data from the bank, customer data, accounts data, transaction data, compute the charges, and send a posting file back to the core banking engine. What is the advantage of it? If the bank tries to do that using the core banking engine, the cost of regression testing alone goes high. If I change the logic of one charge, because it's a monolithic system, I need to test a lending module, a current account module, a deposit module, which is unrelated to the charge. because you need to ensure that you have modified something, it has to work on the whole. Otherwise, some other process may get disturbed. So that's why core banking systems have very long release cycles. They plan the releases of changes into the core banking system once every 3 to 6 months. Whereas using the charge engine, you can release in weeks. So these are some of the advantages. And this is an example of a B2B problem solving. You can help banks charge better, gain customer loyalty, and earn more revenue. That's a B2B model helping banks. B2C, you can start a neobank yourself. For business banking, you can launch a neobank with a bookkeeping ability. You can launch a current account in which you can raise an invoice, for example. These are things that today the business owner subscribes to a bookkeeping application, raises his invoice, then he logs into the internet banking of the bank to check whether the invoice is paid. If you merge them both, you can do it in the same window, as an example. So these are two different models in which the research approach slightly differs, which we will see as we move on to the subsequent slides. So one of the other aspects of the fintech research imperative is understanding the ecosystem, the players who can support you, the non-competing players who can support you to enhance your customer experience or your solution experience. Traditionally, when we think of incumbents, they try to solve everything themselves. Have you wondered if you walk into a bank to see some other logo which is there? They either try to white label it, acquire it, or buy it outright. So they try to traditionally have the mentality that they should own everything that they supply to their customers. Whereas in the fintech space, the ecosystem understanding is completely different. If somebody is not a competition, they embrace their arm, share their APIs, and enrich their value. That's a modern way of thinking to solve for the customer. As long as I own the customer, as long as I own the digital face time of the customer, I don't mind who I tie up with to provide a better service for the customer. So to give you an example, most of you would have used some stockbroker kind of application to do trading for yourself or for your clients. Zerodha is one example. There are many others in the market. So when you sign up to a stockbroker and use the stockbroking platform, what are the things that comes into play? The first box that we see here is the connectivity of that application to the stock exchange, which is their native connectivity. So they need to have connections to the depositories and to the stock exchanges to trade and to park the instruments. That is native to their business. But look at the amount of external connections that they have to make the life easier. If you want to digitally onboard a customer onto your broking platform, you need a digital KYC using Aadhaar Stack or any other biometric identification. You need to have access to document wallet to retrieve original documents to find the authenticity of the document. You need to have a digital signature capability to sign the various terms and conditions and the forms. And you need a contract compliance workflow to carry through the forms to do step-by-step process of signing and emailing it. So these are external problems which are solved by the industry. So you don't, as a fintech, have to solve it again. As long as you solve your core business value, you can take help from all the other ecosystem to make the customer experience better. And as a broker, you always send communication to your customers through emails, SMS, sometimes even a voice recorded phone call. And for these, again, in the past, people used to write email servers or find open source email servers and install it within their application server to send emails. But now there are services using APIs which are available. You pay as you go based on volume. So one of the aspects of research in fintech is also to research in the areas of what are the ecosystems that are available, which are tangential to your business, which if you plug into your main business ecosystem, the customer experience will be much more enriched and your cost will be cheaper. That's one aspect to look at in the ecosystem. And they also use UPI, other payment APIs externally. They even give you an offer to buy gold, which is again supplied by another third party. So one of the aspects is to find out what is niche in the industry and to build a solution to solve for it. It's also to keep your eyes open in terms of the ecosystem of the industry. What all can be plugged in, which is already solved, which will make the sum of its part greater than when it is put together for the customer, which is one aspect that we wanted to touch on this slide. So as we move forward, So when we talk about the fintech players in the industry, we have seen the various verticals or the various domains, as we call it: insurance, capital markets, lending, so and so. In these domains, there are various models or aspects of fintech players. We'll look at some of them. This list is not exhaustive, but this gives an idea about how the different fintech players operate. Number one is an aggregator. So aggregator is a person who brings together various existing services, so their comparison, their validation thereof can be done in a single page by customers. Examples is Bank Bazaar or Policy Bazaar or cleartrip.com, Expedia, some of these industry aggregators, in other industries. In bank, there is Bank Bazaar and Policy Bazaar in the financial space. And we have Yodlee as well, who gives the ability to consolidate bank statements across various banks using a single window. So these are called aggregators. They don't create something new, but they bring together all the players in the industry so you can get everything in one single place. That's an aggregation model. The second is the low fee or a no fee model. So people use technology to make sure that their business is free, and they make money with volumes or through advertisements or through other means, but the primary service they give it for free, thereby they disrupt the space. So Zerodha is one example of a new segment called as discount brokers, who offer very cheap brokerage services and then who play on volumes. So that's the second type of players. Next to the aggregators, there is also the low fee, no fee type of players. Their main value proposition is you get the minimum cost possible or service is free. That's their value proposition. The third type of player is a multi-sided platform. For example, YouTube is a multi-sided platform. On the one side, you have the content creators, the people who upload the videos. On the other hand, you have the video consumers, the content consumers. And in between, you have advertisers coming in. There's also various other transactions possible. So it's a multi-sided platform bringing many people into the same place and creating a value proposition. So in the fintech space also, there are multi-sided platforms that are possible, like Lending Card, bringing lenders and people who are borrowers together. There's Kickstarter, which is crowdsourcing, crowdfunding, where there's a lender, there's a person who has an idea, and then there are in between people who help shape up the value proposition as consultants in the platform. That's what we call as a multi-sided platform. So aggregators, low fee players, multi-sided platforms, and the next category is totally new technology players. They have a total new technology which digitizes a completely existing product, like Bitcoin, for example. It's digital currency. It can be mined, it can be stored in an uncentralized fashion. It can be settled under milliseconds. So the main value proposition of them is that it's a digital currency with zero central counterparty, zero centralized counterparty. So there is no shadow accounts that needs to be done when like RTGS or no, there's no nostro settlement which take days to move the cash and things like that. So among the fintech players, the aggregators, the low fee players, the multi-sided platforms, they don't have so much of a net new innovation to play. And they're quite common for somebody to start. But things like Bitcoin, things like the technology disruptors are very hard, very rare to come by. For example, if I draw a parallels in the automotive world, for a long time, the electric vehicles were not feasible till the lithium technology batteries were found out. So they said it's a loss-making deal if you want to venture into electronic vehicles, because the charge doesn't stay for long and you can't give a range of 150 miles, which the petrol or the diesel vehicle gives typically, at least 50% of that. Then a technology change happened, then it became feasible. So these are things that takes once in a 10-year, now the cycle time is reduced, but it still takes years for a new technology to emerge, thereby leading to some of these type of players. But the other type of players like aggregators, these are the common fintechs that you see as part of the neo-digital world with mobile and internet coming into play with the cloud paradigm shift. And then lastly, we have the data players, big data players. That's a category of people who look at big data, unstructured data, and bring out new value propositions. For example, in the last 5 to 10 years, we have seen banks procuring external data. in some countries, in African countries, we see banks buying telecom bill payment data from telecom companies. They pay and buy the data because that gives a better assurance for banks about their credit predictability. So same way, you can pay rent and include that into your scorecard as a new way of scoring people. So these are big data players that try to take data and have data as a key player, as their asset to change the industry. So these are some of the flavors in which fintechs come into play and try to disrupt the industry. So I'll take a small pause here, and Arun sir, would you like to comment or add anything to this slide?
Yeah. No, I think that's really good kind of classification of the players. Again, no comments except that yes, each of these, we need to connect back to the research framework that we always talk about, right? Start with the problem. What is the problem that each of these players are trying to solve? Starting with a micro level problem, and then as we really see, the kind of technology that comes into play for each of these players are very different. For example, with the aggregator, it's more about APIs or the application programming interfaces that we call, which is more of connecting multiple systems to come together. Whereas in big data and analytics, it's more about consuming data and then running all machine learning algorithms to derive intelligence and insights, which is not generally visible, right? So that way, connection back to the choice of the technology and the problem that we are trying to solve will reset the research agenda is the only point that I want to connect back.
Sure. Thank you, sir.
Thank you.
As we move forward, what are some of the key focus areas of research when you want to analyze and find the niche in terms of either B2B or B2C models? So in B2B models, as we discussed before, you're solving it for an incumbent. You're solving it for a large player, typically who has got a lot of legacy problems. So how can you bring in new technology that can solve some of their internal processes, internal systems, get information flow much faster, better manage their processes, and deliver better value to their end clients? So one of the things is still you're selling software at the end of the day, if it's a B2B model. So you have to improve your top line. You have to increase your sales, which is a key fundamental factor when you're selling your software product to these large banks or financial institutions, and reduce your operating cost in terms of how you provide the service. So keep on innovating and try to reduce the cost year on year so that your margins remain within a comfortable range, and enhance your product quality, that you keep on doing, innovate within your product and try to bring in newer aspects into the product, which you can then sell to these large institutions, achieve scalability. So one of the things in B2B model is your marketing expenses will be slightly higher because you need to have the right expertise to go and sell your B2B solution, or you yourself should be able to sell it as a researcher or as a pioneer of that particular fintech, and most of the time achieve scalability due to that. So one of the challenges to scalability in B2B model is how many institutions you can talk to make a decision in your favor, which is where a lot of money is spent in business development. Business development budget sometimes is larger than your product development budget when you're trying to do a B2B model. And most of your earnings will be either technology license-based earnings, or if you're really a true blue fintech, you can earn a SaaS subscription-based technology revenue. What is the difference between a license revenue and a SaaS revenue? It's very simple. It's 8 times versus 25 times. That's how the market values it. If you sell a product which is a license, which is a one-time revenue, usually it's an 8 to 10 multiple, that's it, to value your company. Whereas if you are charging a large institution as a SaaS revenue, which is a recurring month-on-month revenue, then the multiples is much higher. So as a fintech, if you shift your focus from license revenue of selling a product, software product, to a SaaS-based revenue, then you stand much higher chance of valuation and enhancing the value of the fintech product. On the B2C model, you have to directly simplify and save time in the lives of many people. And you need to know how to earn revenue out of it. Either the customer pays you or it's paid through advertisements. These are the standard classic models of where the money comes from. So you need to Once you know that you've solved the problem, the second focus is you need to focus on how you're going to make money out of it. Then reduce the effort and avoid hassle and keep on improvising the product. Create an affiliation and belonging, which is what is a main theme of the B2C. So you may have a great product, you may have a great problem-solving ability through the fintech, but still a brand affinity, if it doesn't come, the scaling and the belonging doesn't happen. For example, Apple or other similar products, they created an affinity so much that only when you use the product, you are using a real solution. Back in the days, there are certain bike advertisements that focus on the millennials, that unless you ride this bike, you're not really, riding something. So it creates a kind of a cult figure around the product that you're trying to do, which is the main achievement of the B2C model. If a B2C model is really successful, it should create a cult effect around the product that you have and achieve self-actualization, which is the highest form of marketing the product, and then earn subscription revenue directly from the customer, which is the model of B2C. Anything, Arun sir, you'd like to add to the slide?
No, I think, on the SaaS-based technology revenue, there are definitely different models within SaaS, different commercial models within SaaS, how the revenue streams are coming in, which is not just subscription alone, subscription and a combination of services and services based on particular region or particular class of services and all that. So that itself is becoming an area of commercial research, is how I would think.
Sure, absolutely. And when you price it for a B2B model, the key is how can you price it variable.
Yeah.
The traditional way of how institutions like banks, financial institutions, how they buy a software product is that they buy a heavy license fee, a heavy infrastructure, they buy servers to install those softwares, and it's a 5-year to 10-year return on investment. So it requires an upfront locking of capital, which can't be used for anything else. Whereas in the SaaS model, it's a variable model. As the bank makes money, you make money. And there's no upfront locking of capital, which can be used for other customer acquisition, advertisements, brand building, and much more other ways in which the bank can get business from. So the SaaS model really has shifted the focus from banks having to lock up huge capital whenever they do a technology transformation change, which is one of the dimensions of fintech coming into play. So as we move forward to the subsequent slides, let's look at a quick SWOT analysis between an incumbent, a large incumbent player who is already playing in the industry for 50, 60 years. And what does the SWOT analysis for such a player look like vis-a-vis a fintech player who is going to come in and disrupt? So for these large brands, institutions that are there, they have a trusted brand name in which they're in the market for many years. They might have a huge branch network, a network of service outlets that they have to serve the customers. They have large existing customer base, which they've acquired over the last many decades. And some of the customer bases that they have might be very hard to replicate for other new fintechs. So these are their main strengths, their brand, the vast amount of coverage that they have in terms of services, and the large customer base that they already have. What are their opportunities? So since they have a very large customer base, they can easily cross-sell new products. If they introduce a new variant of a current account or a savings account, they easily have a huge potential that they can tap into by doing a small advertisement campaign to their existing customer base. Whereas what are their weaknesses? Over a long period of time, the technology becomes outdated and they have a high cost of customer acquisition. And a majority of their services are human person based, which is high cost services. And they have a lack of transparency and other challenges as they go by. If you ask somebody why a certain fees was charged in your statement, you may get a week to get an answer from them because the process is complex. Somebody has to go figure out what happened and then come back to you. If you write an email, you'll be lucky if you get a response within 24 hours. So the cost of customer acquisition and servicing becomes higher as they go by because they have to manage a lot of legacy issues and legacy technology issues that they have. And what are the threats? Customer loyalty is sometimes a question, especially with millennials. There's a survey conducted in Europe which said 70% of millennials will buy a banking service from a technology company very easily without worrying about the trust issue with the bank. Because they use Spotify to listen to their music. They use probably another service to book their cab. They probably find their rental accommodation through some aggregator sites. For them, procuring a current account from a similar player will not be a huge challenge. So with the new generation coming in, there's a shift in customer loyalty, which will be very difficult for them to retain. So people don't pay huge premium to the institution because of the brand name. They are comfortable if another technology player just provides the same level of services through the mobile app. So these being the SWOT analysis typically for an institution. And in your research, you can keep in mind how we are going to look at all these aspects to decide where your niche is going to be, to latch into those problems of their weaknesses and their threats, so that if that is where is the area where you find your niche, you can dwell in deeper and create a unique value proposition. And if it's a B2B, you also play on their strengths. You can harness their vast customer base and think of a solution, and their opportunity is your opportunity as well. And when we look at the next slide in terms of the challenges of the new challenger banks who are challenging the incumbent, their strengths are they have a mobile only or a website only service most of the time, and they're completely digital in footprint. Today, the majority of the bank, if you look at any bank's balance sheet, the majority of their costs is in terms of running their branches. The real estate, the personnel who are there, the branch cost and the personal cost are two high cost components that you will find in a bank. And for them to recover those aspects from the customer is very difficult, especially when you look at one single product like a current account or a savings account, in which all these costs will have to be recovered from one single service. It becomes quite a challenge for banks. Whereas fintech companies, they don't have this huge branch-based sunk cost which is already there. They can start with a website, they can launch a mobile app and easily start onboarding customers. So that is the main strength for the fintechs. And in terms of their opportunities, they have a large market potential which is untapped. So with mobile phones in everybody's hands, they can easily reach out to people. And they have very relatively low fees that they charge, which is a huge opportunity. So people will start to resonate that now that they have enjoyed Gmail for free, if another app comes from the similar brand, they think, okay, that's also free, let's explore it. But one of the weaknesses is they have to build indigenous customer base. They have to go behind accumulating and retaining customers, which is difficult, which is where majority of the fintechs in B2C space spend their effort upon. And we have certain new titles called Chief Revenue Officers, Customer Success Managers. These are new titles which focuses on the company's main aim to get new customers and retain them. So customer success, you will find certain roles with the title in fintech companies. Their main job is to increase the B2C base if they're a direct B2C player. And equally, while they're trying to build a base, there may be another person slightly improving their own technology solution, building upon the innovation and trying to take customers away. So that's another threat for them. So we find a lot of such fintechs facing this challenge. If you look at a lot of names first come through, and then the name that stands will be the company that constantly innovates to keep the competition at bay. So this is how the research footprint looks like, the SWOT analysis for the challenges and the fintechs. So as we move forward to the next slide, what is the skill set required to run a fintech or to do research in fintech? So this provides a view on whether you need engineering background, a STEM background as we call it, so science and technology, engineering, mathematics, or a CA functional background like what we have in our fraternity. 91% of the employees in any fintech are from STEM background. And as you go up the pyramid, less than 30% of the employees have more than 10 to 15 years of experience. And in between, you have various age groups and other demographics. So what does this tell us? The people with the STEM background are mostly the doers, the executors of the technology. Whereas the people less than 30% who are having 10 to 15 years experience are the visionaries who provide, find the niche, and then give the direction to the STEM engineering people. So from a skill set perspective, if you are on the domain side of things, solving the problem, finding the niche, and then giving instructions to the engineers to solve it, then you form part of the less than 30% of the cream of the cream skill that's going to be in fintech, if you're on the domain side. Or there are newer roles that are coming in which provide customer engineering, where you can visualize a customer's need and try to test a particular product and give your opinion onto it. And there are new roles that emerge into it, user design and user experience. And that's also spaces in which a lot of domain-based knowledge and inputs are required, and that in a highly regulated industry like banking, finance, and insurance. There's a huge need for more domain skills in a very niche utilization area compared to a large engineering skill that you can get from the market. Arun sir, would you like to add to this slide, especially?
Oh no, I think you hit the nail right. It is just about less than 30% are the roles of the percentage, but that forms the cream in terms of the thought capital, and this kind of connects to this framework that I kind of initially discussed, which is what are the roles that are typically relevant in a technology company or in a fintech company in this case. And the core is only here, which is the, it looks like a small bucket here, but it's like connecting back to what Mr. Charles said, 91% of the doers are here. But then the power of us as the CA fraternity in terms of the knowledge of the banking services, knowledge of financial services, knowledge of the accounting regulations, etc., and the ability to look at them with a research perspective comes around that, and that's the power that we really want to drive and provide as the impetus for the research in this area. So that's the key message for me to as a takeaway from this.
Sure. So we have so far seen the different types of fintech players, the different imperatives that you need to see and be aware of when you are trying to do B2B versus B2C problem solving in the fintech space. What skill set it takes to for typical fintech to come out, emerge out. So all these you'll have to keep in terms of your research. So where can you find the best of the STEM talent? How much people you need? What is your resource ramp up mechanism? Where are you going to recruit the team? How are you going to ensure that the cost base of the team is low? How are you going to motivate them? If the funding initially is less, how do you give them stock options to motivate them to stay? All these should also form part of your research, as investors will be keen to know whether you will be able to sustain the resource demand and not fall trap into always hiring high cost resources, which will drive up, which will keep driving up your cost base. So as we move forward, we want to step into a case study of one neobank that was launched successfully in the UK and how it went on to be one of the dominant players within the region. So I'd like to walk you through the life of one Anne Borden. So Anne Borden is a founder of Starling Bank. So the reason why I chose this case study is this is quite an interesting one, because usually when we find fintechs here in India and abroad, we find very young people starting it, very college pass outs or very young bunch of people even in their education last year of engineering, they come together and sit in a dorm room and they start coding and they build fintechs. This is a different one, whereby Anne Borden was around 53 years when she started her fintech career. And she was none other than the Chief Operating Officer, COO of Allied Irish Bank, AIB. And she left a lucrative career as a COO and wanted to start a neobank in London. And she had a very clear case in her mind that post 2008, there's a lot of trust-based issues in banks in Europe, and a lot of people were frustrated with banks, given the way how 2008 turned out. So she wanted to capitalize on that and launch a new brand of a very transparent current account. And she found out that banks invest a lot in branches, and that is a kind of a stumbling block for them to give cheaper services to people, to give free services to people. So she wanted to create a current account, which is almost free, and focus on making the earning through interchange fees and other card-based services fee, and give the current account without any monthly maintenance fee, whereas all the other banks were charging monthly maintenance fee back in those days. So she started a bank in 2014. 2013, she left her job and started a bank in 2014. The license application procedure, as you know, that we have with RBI or any other central bank in any country, is a very cumbersome process. So one of the things that you have to gain as a fintech researcher is you should not easily pay for anything. So what she did was, since the application process for the central bank is very complex and it requires a lot of skill, she engaged PwC to do all the work on a contingent basis. What is a contingent basis of work? If she wins the license, she will pay them. If she does not win the license, then there's no need to pay. So she based the contract based on outcome. So that is the first intelligent thing that she did. Secondly, it is her conviction that a lot of people will think that to start a great fintech, you need a great idea, which is wrong. You need to have one idea and pursue it unflinchingly, without swerving. Google was not the first search engine. There were many search engines before that. Facebook was not the first social media platform. There was MySpace, there was so many things before that. Gmail was not the first email. There were so many emails. The reason why all these flourished and thrived is only because of the persistence of their founders. So if you choose an idea and if you're persistent about it, you can definitely make it. And she's one of the examples in it. So she started applying for the banking license, and parallelly she started to build a prototype of the mobile app only bank, 0 branches. For example, in India today, you don't find a lot of branches for the new payments bank that are coming up. For Paytm, you don't find as many branches as you find for other. So it's an app only banking. She started that back in 2014. She envisaged that in 2014. So what happened is in 2015, before she got the license, her CTO, who was working with her, left her and joined with another rival group and started another bank called Mondo, which he later renamed to Monzo. So in a second, her entire fintech journey was under great threat. She received an email one day. She came back from vacation. It was from her CTO, which said, I'm going to take the entire technology team and I'm going to start another bank. Or I'm going to give you an option. You surrender all your company shares to me and you take only 5% of the company. So all of a sudden, the 2 years of her time, her money investment, her contingent promise to PwC, everything is under stake. So she went through a lot of dilemma. She even in between thought of surrendering her company to the new, because the entire technology team it's a coup. It's like a pirate ship where you always run the ship one step away from mutiny. That's how sometimes the fintech landscape is. It is not as well ordered as we think in many of the times. So then she emerged stronger. She said, no, this is my bank. Even if I let the whole technology team go, I'm not going to give it up. She let the team go. She made a settlement for them. Then new technology players she recruited. She continued the work. She convinced investors, got a seed funding. Then finally she got a license. In fact, one of the fun facts is when she learned that the new company, the people who left, they were starting the company called Monzo. She immediately searched for monzobank.com website. They only bought monzo.com. They forgot to buy monzobank.com. She purchased it on her personal account for fun's sake And whoever the next day went and searched, after their ad campaign, whoever went and searched for Monzo Bank, her search result came first. And in that, she put an advertisement for Starling, and she said, we congratulate Monzo on the naming. And below that, she gave a link for onboarding to Starling for first 2 months. Then she put it on Twitter that she's willing to sell the Monzo Bank site to them, provided they pay £1,000 to charity, and she sold it back to them. So this is the kind of spirit, how to get back even to the people who stabbed her on the back in a fun way. So as a founder, as a person who does research on the fintech, who wants to come out with a unique value proposition, they should also have the ability to predict anything. You cannot predict everything all the time, but when things happen like this, there are certain things where you may not get the regulator licenses at time. The people who work with you may have suddenly a change in mind. You should be prepared to handle all these things, and all these things should be put into your research framework. Always having a backup plan after backup plan as to what is your order of priority if any one thing fails. So that's what they say when you're doing research on fintech and trying to draw conclusions. Make Uncle Murphy your friend, because whatever can go wrong, you should be able to prepare for it. You should be prepared for it. So then she got her banking license, and then to her luck, there was a new grant that is being put together by the government. So after her license in 2016, she started onboarding customers. Then there was a public grant which was given by the government, and she applied for it and got £100 million grant for her business. And then she even started scaling without much of investors backing and support. So this is a very brief journey of how the Starling Bank is founded. And Starling is name that is constantly resonated, and she was given an award for changing the banking industry. So when she tells her customer ramp up speed to even traditional banks are envious of it. So her business retail account is 1.34 million customers. Her current account is 200,000 customers. So these are the ramp up rate in which even the branch banking, the feet on street marketing is not able to achieve this type of scale. So that's how she was able to create a vibe around the new bank brand that she launched and made it successful. So this is one case study. And as we move on to the next slide, while she did the new bank, which is where initially we touched upon the ecosystem of the fintech space, that whatever is already solved, you can bring in to strengthen your own offering, to strengthen your own customer experience. So in 2017, there was Tail and Flux. So Tail is a kind of a spending point saving fintech. So she tied with them for card spend to give better reward points to customers. And there was Wealth Simple, there was Habit company, which is mortgage and financial wealth advisory. She partnered with them to give a lot of saving, retirement planning, wealth tips to customers through the Starling app. She also tied up with Xero, QuickBooks, some of the bookkeeping apps to give the bookkeeping facility to customers by tying up with them. And there were other fintechs, for example, there's one fintech, Credit Ladder, which the way you pay your rent, the monthly rent, your credit score is assessed and you get better loans. There is another player called Penfold, which is a pension investment fintech, where you can put small amounts for your pension growth. And there is another player called Equips SME, which is basically invoice insurance fintech. So if you upload your invoice and if you upload the last 6 months regular payment of the invoice from the vendor, you will get an invoice insurance where even if the party, your client doesn't pay, the insurance will pay you the invoice, as an example. So these are some of the ecosystems that she plugged into her Starling Bank to make her experience much more richer and efficient. So close to 33% of her business customers have subscribed to any one of these marketplace services. So within her bank, she created a marketplace for these ecosystem players to come in and enrich the experience of her banking relationship. So as we move forward to our next slide. So this is something when you're doing the research imperatives on fintech, to keep in mind the various stages of in which a fintech life cycle is formed. So initially there's an ideation phase. In ideation phase, there's a lot of research on finding the niche. What is the value proposition? Are you going to be an aggregator? Are you going to be a big data player? Are you going to be a B2B player or B2C player? Are you going to be a person going to use latest technology? Is it going to be a no fee or a low fee model? So all the heavy research around finding the niche and carving out the solution happens in the ideation phase. Then once the idea is formed and the business case and the model is strengthened, then you get into the prototyping phase, where you start to build a prototype or a beta version and try to roll it out, show it to a few people and get their experience. So sometimes immediately after the ideation phase, if you're lucky, you get your funding. So people like the idea and they give you $150,000, $250,000 to say, go build this prototype and show me. If you're able to get such type of, so these are called angel investors or seed fund investors. So they like the idea and then they pay you some money and say, build something and show it to me in a beta version and try to onboard few customers and show it to me. So that's the prototyping stage. So in prototype, your research will slightly shift from domain into technology, which is where the technology and domain will first time start to cross path. So which technology I'm going to build this prototype on? Is prototype something that I can scratch and build something new later when I want a more stable technology? Because prototyping technology could sometimes be cheap for the skills and the availability, but it's not scalable. So I may build a prototype on PHP, then I may go to Java for more robust technology, or I may build only the UI UX part of it and the backend engine I will just leave it in a very clumsy semi-manual way for now, because UI UX is the most sellable feature of this prototype. So in the backend, I'll for now just have a database that does a very small logic, and I'll build a more richer front end. So these are some of the decisions that are key when you want to research at the prototype phase. And then the early revenue phase, where your research should focus on the cost of acquisition, cost of onboarding customer, cost to serve a customer, and what is your cost base to serve them. Initially, you may be making a loss, but your cost base will remain the same in digital technology. As you ramp up the customer and scalability, your profit margins will increase. So during the early revenue stage, your research will be mostly focused on return on investment model and the cost operating cost model. So what is my fixed cost? What is my variable cost? How can I bring my variable cost down? How can I make sure that my fixed cost remains the same, but the revenue perpetually grows? So between your prototype and early stage revenue, typically in a startup, you spend close to 4 to 5 years. When you're in the early stage of revenue, easily you will be 5 years. And that's a survival testing point for most of the fintechs. 1 out of 50 fintechs only survive up to this point. And the survival rate after this starts to diminish or starts to soar as early revenue state, early revenue is thoroughly tested for the product. Sometimes this is where you move from angel seed investors directly, you go into some of the venture capitalists. So venture capitalists will come in not sometimes during prototyping, but they'll come in during early revenue, and they know that this one will work. The marketing is right. We only need to pour more gasoline, more fund on it, so that it picks up the fire. And then business expansion is where you can still go to a VC, or you can directly go to. Nowadays, there are even provisions for you to go directly to an IPO in the SME stock exchange, if you find a reason to do that. Or there are other funds, other venture funds that will come and support you during the business expansion stage. So the imperatives for research widely differs across these 4 stages of fintech. Customer acquisition servicing. Then you get into business expansion, where most of your focus will be on marketing. How can you, with the least amount of money, reach 1 million people and get them to sign up? That's a challenge during business expansions. And how can you make sure that your marketing is, whenever you want to increase the marketing spend, that results directly in some customer acquisition or some revenue coming back to you? That's the type of research that will change when you're into business expansions. And so these are the key stages that you need to have in mind when you're doing research, either for your own purpose, or if you're supporting another fintech company as a client to find out which area they are in, which phase they are in, and how can you help them in research. And as we move to the next slide, finally, so this is where what is it for our fraternity, right? So finally, it has to come back to our relevance as a CA. So if you're in the B2C space, you can empathize very well with the customer. Whereas if you're in the B2B space, you need to have a lot of knowledge about the industry, how the industry works, what are the technology challenges of that large institution that you're going to support, what are the intricacies. So these are sometimes the B2B industry knowledge pain points are gained through years of experience of working in a bank, working in an insurance company, looking at all the weaknesses of the technology enterprise systems that they have. What is the flexibility of each system? How difficult it is for them to implement a change, technology-wise, process-wise, people-wise, culture-wise. Where is their challenge, and how? What is the agility ratio for each one of them? So, if you are a fresher, if you are a CA in the financial sector, you can surround yourself with a lot of engineering team members as friends or discussion buddies. You can find out what is the new technology that's coming in, and especially if you surround yourself with people who have a lot of ability to do something without expecting a payment. That over a Saturday, Sunday, can you build something? I'll draw a few screens. Can you build that and show it to me on a clickable prototype? If there are people willing to do it, then that's a very great start. And then slowly you can incentivize them to, as you build your idea into prototype, you can start to incentivize them. And whereas your role will mostly be to maintain the ROI, the business model, and then extract the value out of the technology team that helps you to support a prototype. Whereas your context will be on how the money is made, how the money is managed, and then rely on the support of engineers to build the idea that you have. Whereas if you want to solve a B2B problem, then you need to have real insight data into how the industry works. For a banking company, what is the challenge? For an insurance company, what is the challenge? Or for a capital markets company, what is the challenge? And then take the help of industry experts to understand what it is. If you get a good idea, speak to the industry experts and try to test the idea, try to validate the idea from very reliable sources, and make sure that you also guard your idea during the research, because it's easily replicatable. It can be copied. So maintain a network of very trusted individuals with whom you can test your idea from time to time. And then if you get concurrence from a lot of people, that's proof point that you can go ahead and explore the idea. Whereas if you're from a non-financial sector, you're already in an industry, you already have gained a deeper knowledge in the industry, then you can identify areas where you can find out new solutions which are faster, better, and cheaper, and try to see whether there are a lot of players in the industry already, or you are an early mover, or what's your unique value proposition. Even if there are many players, how do you differentiate yourself? And then you can find out the niche within that area. And if you want to solve the problem for B2B, similarly, you can identify any gap in the industry where customer want that service, but it's not serviced by the industry. And then protect your solution through IP rights, because especially when you're trying to sell to large companies, and if your idea is easily buildable, without a proper NDA and without a proper protection and non-disclosure, your IP can easily be replicated by others. So those are areas where you have to file for patents, file for IP rights, protect your copyright, and then have a conversation and expose your solution to them for evaluation and things like that. And mostly if you're solving for B2B, you can find one client, one large bank or industry. Nowadays, there are a lot of these fintech labs which are set up by banks, where they'll give you a free seat, you can go in, they'll give you open APIs to plug in, you can build your solution and show it to them. They have standard contracts that protect your work in terms of IP. And then you can use that as a pilot to test your solution. If it works with the bank, then you can get an investment, build it into a larger product, and then start selling it to other banks. So you can always have a pilot approach when you're trying to sell B2B by having one anchor client who is willing to experiment with you. For them, you may give a lot of discounts or even do it for free. Then if it works, you can replicate it across other banks by making sure that it's successful. Whereas on the B2C, you always need to have very trusted beta rollout against people who will give you very clear feedback as to how it works. And then based on that, you can adjust and fine tune your product and take it forward. So these are some of the career progression areas, depending upon which sector you are in. You may be working for an industry, you may know a lot of deep process problems, domain problems in the industry, and then you can build a niche out of it. Or you can be a good financial person, and then you can have a good network of engineers. By talking to them, you can creatively solve a problem for the end customer, and then you can take it forward as well, or using industry experts to validate your new idea, and you can take it forward as well. So these are some of the patterns in which we as CAs can start to do research, start to create our niche, get it patented, and move it from ideation to prototype and beyond. Arun sir, would like to add anything further to the slide?
No, I think as I know, one key thing is for us as CAs, primarily, yes, the strong foundation in the core subjects, right, accounting, auditing, and finance is the base. Coupled with that, the industry experience, a specific domain experience, and then, of course, taking technology as an enabler, taking technology as problem-solving, instruments, so to say. And then, how do we build our? This slide is more focused on a research career itself, right? I mean, traditionally, if you look back about 10 years back, research careers were kind of in the domain of only academics. But then that's another blur that's happening, right? I mean, the research careers or the research outlook need not be just in academics. It can happen in an industry. It can happen in a domain-centric industry. You can be a banker. You can be a CA turned banker, but still focus on technology research and enhance your career experience and direct your career to take different form and shape. Or you could be sitting in an insurance company and then still do that. Or it could be you could be a starter early in your life cycle as a CA, and look at totally tech research as your launch pad and as your career as well, right? So those are some of the possibilities that are really evolving. And I would taking your own personal example, right? If you allow me, Charles, you started as a CA, and then you started specializing in banking domain, and then into consulting, and then you had your hands-on into technology, scaled it up at a global level, and then you are a neobank founder today, right? So I'm sure you have done different flavors of research in each of these stages itself. And which is the crux of what you've been trying to bring, which is there is various dimensions of research that we need to do from a fintech perspective, but choosing what you want to do between, for example, B2B to B2C is one dimension of decision that we need to take. And then being a player, is it an aggregator versus a premium player versus a data analytics player? That's another area of decision that will influence your research path. And then also you talked about the various life stages itself of the fintech company, right? So that way there is plethora of opportunities. It's just for us as CS to again, it's not just for young CS. I mean, I keep using that to kind of motivate, but I'm sure and I believe that each of the 3,000 plus participants who are here are young, either by age or by mind, right? So read my phrase as is someone young in the career as young in mind as well. And that's where Charles, your example of how this Starling Bank founder started this journey of totally, getting into a new unknown area of fintech research at the age of 51 or 52, right? So it's just for us to latch on and leverage, and then launch our research agenda and research journey, and tying back to how each of these will add value to us, to our clients, to our economy, and to our government. So that is the larger frame that I'm looking at, Charles.
Thank you, Arun, sir. I think we have reached.
Yeah. Sure. With your permission, Charles, few more topics, few more thoughts I just wanted to share. As I said, a great journey of research possibilities. Again, thanks for sharing your tons of experience and structuring that in different dimensions. And I would want to spend few minutes before maybe we get into question and answers on where do we start if someone were to start a research purely for an academic interest or purely from an exploratory purpose. I mean, is this field for me at all? Is this, I mean, do I really bet on this fintech research? Those are the questions obviously we will have in our minds. So to them, a top 10 of my research collections based on recent study. All these publications are done in the last maybe 2 to 3 years. So they are very current in terms of the research issues or the research directions or the technologies involved. Primary one, first one to start would be fintech as a game changer. Wonderful, very well written research article published in the year 2021. It talks about the various service opportunities, the various functions opportunities, and how technology, crisscrosses each of these things, and how technology, applying technology can change and transform the way even some of these services are being looked at. So that's one area where you can really, that's one paper where people interested can really look at, and some of them look at using specific technologies. For example, blockchain in fintech. How do we do that? Or data and analytics, or fintech risk management, right? So that's another trend and things like that. And also, it's not that there are no challenges. Obviously, any field, we need to be taking cognizance of the challenges. So paper number 5, which is challenges around the financial technology, fintech. This paper has organized at least 100 plus research publications, logically groups them, organizes them, and gives us a very good systematic view of the challenges and trends. So if someone is really, to connecting back to our chairman's initial highlight on promoting research, and if research project or even young research scholarship, if people are really interested, if some of the participants are interested, this can be this publication number 5 can give you a good jump start on a literature survey that's already there. Maybe you just need to start from there and then fill in the gap for the last 9 months or so. Your literature survey is done, kind of, right? So that is the kind of publication that's on number 5. Kind of same with research publication number 7 as well, research directions in digital transformation specifically. And fintech credit again is a research surveys compendium kind of. So each of these can give good pointers. So make good use of this. And of course, we'll start building on top of this. So with that, I think, again, a big thanks to the committee for having both of us here. And as I always say, what we have seen is only kind of the tip of these icebergs that we see. And with the help of the experience that was shared, and with the help of these research publications, if you drill down and deep, go down, drilling down, we can really have much more learning that will help each one of us if you are interested, to start our journey into fintech research. So with that, once again, thanks so much. And Charles, if you want to add any of your concluding remarks, you can please do that, and then give it back to CA Amitji, Dr. Amit Agarwalji.
Yes, Arun sir. So I'd like to once again thank the participants, the esteemed panelists, Anuj Goyalji, and everyone from the Krishnagar branch as well. So thanks everyone for giving us the opportunity. Thank you.
Thank you very much. I think we can stop screen sharing.
I would like to.
Yes, sir.
Thank you, Charles sir. Thank you, Arunji. Thank you very much for great deliberation. Wonderful. So we are really fortunate to have the chartered accountants like Charles ji and Arunji. We are having the presence of our very, very prominent chartered accountant from Dehradun, the capital branch of the state of Uttarakhand, CA Sasank Goyal ji. And of course, Sasank ji, we are having the presence of our very, very prominent leaders of the profession from Kishangarh. We are having Saket Kalani ji, Chairman Kishangarh branch. And of course, we are having CA Mohit Jain ji, our Secretary and Sekasa Chairman of Kishangarh branch. So may I request our honorable member from Dehradun, CA Sasank Goyal ji, to raise the query on behalf of all of us, of CA Rakesh Chaudhary ji from Ghaziabad. He always being very, very active, asked a lot of queries on behalf of all of us, which are very, very important for the cause of the profession. So may I request Sasank Goyal ji to please raise the query on behalf of all of us of CA Rakesh Chaudhary. Yeah. So in the meanwhile, I will ask the query on behalf of all of you. He is appreciating this CP program on the research on imperatives of fintech ecosystems. ICAI should initiate a chartered accountant information system and technologies in all the professional services with an integrated portal site, financial enterprise resource planning, FERP, mail management, and client management systems in audit, financial reporting, income tax, GST management consulting, financial services, projects, investments, banking, legal management, CPE resources, analytics, registrations, and filings with all the regulatory bodies, education, examination, professional services of ICAI and Government of India, etc. So thank you in anticipation, CA Rakesh Chaudhary. So thank you, Rakesh ji, for your thought process, and we will certainly try to see that how these can be implemented at the earliest. Charles ji, Arun sir, you want to say something about this? As you both are the senior members of the Institute of Chartered Accountants of India, so you can very well respond.
Yeah, definitely, the chairman sir. Yes, I think a wonderful list of long list of services that can be bundled together, and I think we already have some of that in place. For example, the digital learning hub itself has been a great, wonderful learning portal for us. I have personally utilized many of the courses from there, and so it's a question of integrating them and making it a kind of a service portal, more like right now it's like a knowledge portal. The idea or suggestion is to make it as a service level service portal as well. So, yes.
Yeah, Charles ji, you want to say something?
I concur with Arun sir, Chairman sir. Thank you.
Yeah. Then we are having one query of Ravindra Kamath ji from Pune. May I request CA Sasank Goyal ji to please ask the query.
The query is, what do you think about the credentials the new fintech carry? We find loads of lacunas in the services committee in what users get. So, sir, your opinion please on this.
I will repeat. What you think about the credentials the new fintech carry? We find lots of lacunas in the services committed in advert, and what users get.
Yes. Arun sir, would you like to start, or can I start?
Go ahead, Charles. Yeah.
So, in terms of when we say fintechs, there are certain times where the validation is not there, like you rightly asked. For example, if there's a bank that is there for 50 years, you know how good or bad the bank is. But a fintech is a new service which is starting, and the credibility can only be established over a period of time. And there are multiple points in which fintech service may fail. Not only the talent and the skill of the technology team, the funding is not available in the right time for them to get to the next level of funding. There may be other technology factors, regulations that may come and oppress some of the fintechs. So, in terms of fintech, only time and the scalability over time, over a period of time, can be established. If you look at which is where the pivoting is key in terms of the fintech. I don't know how many of you may be aware that YouTube started as an online dating platform. It was not for content sharing. It was a video dating platform as it originally started. The Slack tool that the coders generally use for communicating was started with a different agenda. So although fintechs start with certain vision, they pivot into certain areas once they reach a certain level of maturity. So that way it gives a lot of flexibility to banks and users to take care of it. And if you look at even established banks, so today recently there was a ban on MasterCard not to sell new cards in their logo anymore. Previously there was similar episode with HDFC Bank. So even larger banks are also facing some of these uncertainties as we go forward. And in the digital world, the key is both large players and fintech players will have to stand up to the same test of credibility. Arun sir, I would like to add anything.
No, I think very well said. The test of credibility is the same, be it a traditional bank with huge capital outlay versus this thing. The only point I would want to add is I gave a list of 10 top 10 research topics, right? Interestingly, I could not find substantial research publications on two topics. One is the topic of security and things like that, and number two, on this whole theory of credibility and trustworthiness of the emerging fintechs as well. So perhaps that could itself become an area of research as to if there is a failure, why are they failing, and what are the factors causing to their fail as such. With that, I turn it back for the next question, please.
Yeah, thank you. Then from Bangalore, Sriram Sarmaji is appreciating the deliberation. So thank you, Sriramji. And my very, very good friend from Ranchi, Raj Kishore Prasad Sahaji, want to ask a query. I will request our young chartered accountant from Dehradun, CA Shikhar Pokralji, to ask the query.
What is the necessity of ecosystem?
So the question is, what is the necessity of ecosystem?
Yeah. So the query of Raj Kishore Prasad Sahaji from Ranchi, the capital branch of the state of Jharkhand, is necessity of ecosystem.
Okay. So probably I'll start off, and Arun sir, you can.
Yeah, please go ahead.
So the necessity of ecosystem is to solve some of the surrounding solutions which will enhance your core offering, like authentication of customer, identification, sending out emails. So these are administrative elements which an enterprise anyways need, and which are already solved by other fintechs on a shared services model, solved by other companies. So the fintech company does not have to reinvent the wheel with respect to some of these administrative areas, which are not your core function. So these could be outsourced through an API model, consuming from an ecosystem, number one. And secondly, to give you an example, previously emails and email exchange servers were run by banks inside their enterprise as an in-house solution. to any bank you go in the past, even now with a lot of banks, you can see there will be an email server team of 10, 15 people sitting and running an email server for the bank's own email. If it is bankofbaroda.com, there will be a Lotus Note server sitting somewhere, and it's been run with dedicated effort, with hardware, everything. Now, a lot of banks are moving that email to Microsoft Cloud as an Office 365 subscription. So today, even as a chartered accountant for your office, you may buy an Office 365 email Outlook.com subscription. What is the benefit of that? The benefit of that prima facie is the reduction of the server cost, reduction of the team cost to run it. You get it on a variable subscription mode, you pay Microsoft. But the real advantage of the cloud is that today, 50% of the work within the bank happens on Teams rather than on Outlook. So people who used to write emails to each other have now started to chat on Teams, which was given free by Microsoft as part of the Office 365 suite. And in addition to that, they can invite an external party, like another consultant, and within the bank, they can collaborate and create new documents. So external consultant, an outside employee, and a bank employee in Teams can work on the same document in a very, very secure fashion. In the past, they have to onboard the consultant, create an email ID, which itself is a 4 weeks effort normally. And then after that, destroy the email ID, which is an administrative process. Now, in moment's notice, anybody can be invited to join and collaborate with the bank on a fast scaling basis. So this is one example of an ecosystem, which Microsoft has solved, which banks are using. Similarly, there are many examples. So ecosystem primarily solves all the other surrounding aspects like communication, authentication, certain things which are already solved at scale by other parties, and you just inherit those for a small fee. Arun sir, anything you'd like to add?
No, I think the key is of an ecosystem is the principle of core versus non-core, right? I mean that's the point that CA Charles was also trying to explain, which is if I want to focus on what I want to do, I become a specialized player, and an ecosystem has multiple players. And see, this choice of core versus non-core or shifting away from a non-core activities has always been there with the large manufacturing industries also. But the only paradigm is there if I have to drop something which is not my core area and move on. It used to take 6 months or even years to spin off or sell off a non-core activity. Whereas here, because it's all technology focused thing, the choice of cutting off or adding on is pretty simple, as Charles said, plug-in services or APIs. So that is what is the essential principle driving the need for an ecosystem evolving.
Thank you very much. Thanks a lot. Lot number of members are appreciating.
Thank you so much.
From Dharwad, Raghuveer is also appreciating. So thank you very much. And I think we have to conclude. So without taking no further time, I once again extend my heartfelt gratitude to Charles sir, Arun sir, and all our honorable participants. More than 3,000 participants are live with us, and of course the team Kishangarh, headed by CA Saket Kalani ji, my brother, the chairman of the branch, and CA Mohit Jain ji, our honorable Secretary and Sekasa chairman of Kishangarh branch. And of course, we are having our special guest, CA Sasank Goyal ji from Dehradun, and CA Shikhar ji from Dehradun. So thank you very much. And may I request our honorable Secretary and Sekasa chairman of Kishangarh branch, CA Mohit Jain ji, for his final words and a vote of thanks, please. Over to CA Mohit Kumar Jain.
Thank you very much, sir. Thank you a lot. Good evening to all of you. This is CA Mohit Jain, Secretary of Kishangarh branch of ICAI. Deems it great pleasure and privilege to propose the vote of thanks to this wonderful event. First of foremost, I just want to thank CA Anuj Goyal sir, the CCM of ICAI, who, despite of his busy schedule, found time to grace this event and guide us on behalf of this committee to host this program. I also express my heartfelt gratitude to both the speakers for today's event to share their knowledge to all the participants, making all the important things so easy to remember and to work on this field of the area, the vast area the ICAI is presenting to the members. We are very grateful to see Amit ji, the moderator of this session, who is very well moderating this session, and Shashank ji to take this query session. Thank you a lot, sir. Last but not the least, I am very thankful to all the friends and fraternity from this fraternity, members from the fraternity, for this patiently listening and learning from the speaker Arun sir and Charles sir. We are very obliged to get your words of wisdom, sir. Thank you, all of you. Thank you a lot. Over to you, Amit sir. Thank you.
Thank you, Mohit Janji, our Honorable Secretary and Sikasa Chairman of the Kishangarh branch. Thank you, Charles sir. Thank you, Arun sir. Thank you, our Honorable Chairman of Kishangarh branch, Saket Kalani ji. Thank you, our Honorable Special Guest, C. Sasank Goyal ji and C. Sikhar Pokral ji from the state capital of the Devbhoomi, Uttarakhand, Dehradun. And of course, Dr. Amit Agrawal ji and CA Amit Agrawal ji and Rahul ji, project associate, the chartered accountant, for being the part of these efforts. And we are having more than 3,000 chartered accountants live with us from each and every part of the world. So thank you very much. And we look forward for more and more support of Arun sir and Charles ji in the times to come also. Thank you, Team Kishangarh, headed by Saket Kalani ji and Mohit Jain ji, our Honorable Secretary and Sikasa Chairman. Under their able leadership, we are really putting our best to see that how we can really do something concrete for the cause of the profession, for the cause of the members, for the cause of the students, and for the cause of the society. Thank you very much.
Pleasure is all ours, sir. Thank you all the speakers and panel. Thank you a lot, sir.